Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Investors have likely heard that investing in stocks is a smart move for your financial future. But that's only true if you build an investment portfolio that actually aligns with your goals. Unfortunately, the process of investing in stocks seems shrouded in mystery for many beginners. The good news is that researching stocks doesn't have to be overwhelming. Like all skills, you'll need to learn the basics to get started. We have teamed up today with our friends at The Motley Fool to explore how to research stocks for beginners. The Motley Fool, by the way, offers detailed analysis of companies to invest in, all kinds of monthly stock picks, and even some model portfolios for you to consider. You can check out The Motley Fool at thecollegeinvestor.com. Right inside this article, you can see a link. It'll take you right to where you need to go. Nail down your investment goals. That's the first thing we got to do. If you're investing in stocks, it's really a good idea to have your financial goals written down. Look at them, see them, study them. Of course, the general goal of investing is to potentially build wealth. That's a great place to start, of course, but getting specific about your goals can help you build a portfolio that meets your needs. A few reasons why you might want to invest in stocks include the goal of becoming financially independent, retiring at an early age or a reasonable age, or even building up the funds for a major purchase that's at least a decade in the future. Whatever your goals are for your investment portfolio, consider writing them down to help you stay on track. The stock market is an inherent volatile place. With all of the ups and downs, a written down goal can help you stay the course on the roller coaster ride. Plus, you might have separate goals for different parts of your portfolio. For example, you might allocate 90% of your portfolio to long-term goals like retirement, and you might keep that 10% to trade and invest. Kind of like play money, if you will. And then, after you're done looking at your goals, you want to choose your approach. As you consider a stock for your portfolio, you need to analyze it. And there are two different approaches for this. Let's take a look at each of those. First of all, a fundamental analysis. This looks at the underlying value of a business to determine what the stock price should be. This type of analysis is the perfect fit for value investors. A value investor acts like a bargain hunter, if you will, searching for the best deal. But instead of combing through thrift stores, a value hunter searches for bargains in the stock market. Typically, this would be a long-term strategy. When conducting fundamental analysis, you'll look at the metrics of a business to determine if the stock price accurately reflects the value of the business. If your fundamental analysis finds that a business's stock price is lower than you think it should be, then that stock could make a great addition to your portfolio. Many of the picks from The Motley Fool are based on a fundamental analysis of the company and its competitors to determine if it's a buy. Then we take a look at technical analysis, which is on the flip side. Some investors actually prefer the technical analysis type of things. With this type of analysis, you'll assume that the stock price is an accurate assessment of the underlying business. So instead of looking for deals based on value of the business, you'll look for opportunities to buy a stock based on the history of that stock's price. Technical analysis has the goal of rooting out patterns in a stock price. Generally, this is a short-term investment strategy. The right approach varies based on your goals. So if you're looking for long-term stock picks, then fundamental analysis is the preferred approach. But technical analysis can work well for short-term investment goals. Let's talk about learning those investing metrics. When conducting either a fundamental or technical analysis, you'll need to know some of the basic metrics used to evaluate a stock. You can find this information through documents filed with the U.S. Securities and Exchange Commission, SEC, or use a service like The Motley Fool, of course, which actually aggregates a lot of metrics about a company into just a single dashboard. It's pretty awesome. Here are a few of the metrics to learn. Price to book ratio. So the price to book PB ratio compares the value of the company's assets against its stock price. You can determine a company's book value by looking for the sum of a company's total tangible assets minus its total liabilities. If the book value is higher than the stock price, then you could potentially make money, even if the company went bankrupt. Price to earnings ratio. The price to earnings ratio, or PE, indicates how much an investor makes in dividends in relation to the price. This is often considered the most commonly used metric when evaluating stocks through fundamental analysis. Price to earnings growth ratio. The price to earnings growth PEG ratio takes a look at how fast the company is growing in relation to its price. To find this value, you'll need to divide the PE ratio by its annualized expected earnings growth rate for the next several years. These numbers are just the tip of the iceberg, by the way, for researching stocks, but understanding these numbers is a great place to get started for beginners and a good foundation to lay for yourself. Looking into a company's records. This is super important. A company's stock price isn't the only factor investors should consider. As you build out an investment portfolio, you'll also want to look for businesses that have a solid plan for reliable earnings. You should look for businesses with proven management. The right management can make or break a company. So before investing in a stock, make sure you are comfortable with who is running the company. Oh, this is huge. Also look for industry trends. Is a stock in a dying industry or a growing one? Look into the general trends of an industry before making a significant investment. Also, competitive advantage. What sets a company apart from everybody else? The right competitive advantage can secure profits for years to come. You can find this information on a company's website and also in the news. Keep an eye out for companies that hit all three of the points above. Those are going to be good bets. Here's when to go from research to purchase, the all-important step. Although researching stocks is important and can be kind of fun, you'll need to go from research to purchase at some point, right? But what's the right point? Ultimately, it's when you feel comfortable with your abilities to select a stock that aligns with your financial goals. As I mentioned, the stock market is inherently volatile, so should you invest when the market has a huge swing up or down? The answer to that is you should keep building your portfolio in alignment with your goals. This is all about you. You can find opportunities to invest in a booming market and even a falling market. Don't let the major swings sway you away from your investment plans. Remember this, and this is the most important thing that we will ever talk about ever. Investing is for the long term. One more time with feeling. Investing is for the long term. Hashtag long term. You should be looking to buy and hold your investment for years, not just a few days. So don't let those small price swings scare you. Now let's talk about what tool you can use to help you. So at some point, you might get a little frustrated with free options to research stocks, and you might want to look for a tool to help. This is where a tool like the Motley Fool can come into play. The Motley Fool offers a full suite of research tools to help you find stocks to invest in. They also share their own recommendations of stocks to buy based on their own proprietary research. And it is good research, let me tell you. The cool thing about these picks is that they actually lay out their thesis and research for you to look at and decide for yourself. Even if you don't like that single company that they have picked, learning the insights they are looking at are key and can help you practice as a beginner and get better yourself. As you build your portfolio, the Motley Fool also has model portfolios and advanced tools that can help you in the long term. Remember what investing is? It's for the long term. And they have a ton of educational content, even live streams during the day as well. If you want to save some time in researching stocks, you can check out the Motley Fool. Again, we have tons of links and more you can find right inside this article. Copy and paste the title of this podcast right in the search bar at thecollegeinvestor.com and you'll find it. Here's the bottom line. Researching stocks is an important skill for investors to learn. But as you build your portfolio, consider using stock research tools to kind of streamline your decision-making process. One great option is, of course, The Motley Fool. The affordable stock research platform really could be the perfect place for you to learn the ins and outs of researching stocks. You can choose to root out all of this information from free sources as well, but be prepared to commit more time to the process. Find The Motley Fool, all the links and resources again, at thecollegeinvestor.com. Thanks for stopping by today. That is our show, and we will talk to you again real soon.